Hello everyone, Luke with Equipment Capital Corp. President of Equipment Capital Corp. Started about 6 years ago. Just thought I'd jump on here and introduce myself for those of you that don't know me. My background is I was inside the banks and credit union system for a number of years. Left that to go be a CFO for one of my customers actually when I was in the bank as a private pipeline contractor. Managed that company through tenfold revenue growth prior to it selling. Once it was sold, then started up Equipment Capital Corp. So kind of in the middle of being at the bank and being the purchaser of equipment. So now kind of being that intermediary. What makes us different? I'd say, based on my background, I have that CFO mentality to look at things, not just that transaction, to make sure it's the best for your company, not the best for us, to make sure it's structured properly, to make sure it meets your needs, whether that's term, monthly payment, seasonal payment, all that sorts of stuff. So I think we can add that value added over rather than just that transactional approach. We do have some transactional approach clients, but I think our strength is our customers phone us for advice or asking about different purchases they're thinking about making because they know they're going to get that true, no nonsense, right advice, not what's best for us, but rather what's best for them. Brokers seem to have a negative rap in the industry at times. I think this is somewhat unfounded. There is the same as any industry. Some brokers are good, some brokers are bad. We've no different than any industry. There's good doctors, there's bad doctors. I think the brokers that aren't upfront or they're not lasting in this industry. They're always finding new clients. I guess the way to protect yourself against a bad broker is to ask for an amortization schedule before signing the documents, because in that way you can confirm if that rate they're telling you is what that rate is you're paying. Brokers can add a lot of value. If you look at the right broker, and there's many great brokers out there, finance brokers, they can bring that value add, because if you go into the bank yourself and they turn you down, now you've got to start over, start from scratch with another bank. And if they turn you down, you go to the third one. Well, at that time you're ready to give up. The broker has access to 15, 20, 30 lenders depending on the broker. So we have options depending on that piece of equipment, depending on your credit, depending on the financial position of your company. We have options and know who to send it to eliminate those declines or eliminate you having to start over. It lets us do the work for you while you're out there working, making money, running your company. And who wants to deal with finance companies? As you can see, it makes everybody's hair falls out from being in the industry for so long. There's always a debate between leasing and loans. Why is that connotation there? I guess leasing previously always had the idea is not really the right word. Leasing always had that negative thing to it because in the 80s and 90s, the people that leased were the people that couldn't afford to buy. And I think probably rightfully so back in the day, some of that was warranted, but the leases of today aren't what the leases were of the 80s and 90s. So now leases are structured very similar to a loan. They reduce down to zero at the end of your term. So at 60 months, your balance is zero. And if it's structured, you buy it out for $1. However, there's some tax benefits to that lease. You're not having to pay your GST up front. You're paying it on every payment. If you live in a province with PST, you're not having to pay that PST up front. You're getting that on every payment because you're renting it and buying it out at the end. It also has some tax advantages for deductions, which your accountant can explain more. So I think the leases of today, if they're structured right, are better than loans are on a lot of assets. However, we do have that option for loans or leases. Probably 95% of the stuff we do are leases due to their tax advantage. In regards to what type of assets can be financed, I guess there it's a big picture out there now. Pretty much any asset can be financed with serial numbers, and even assets without serial numbers. You can finance office furniture, phone systems, computer systems, software, construction equipment, aggregate equipment, shelving units for warehouses. So there is really no limitation on what assets can be financed due to our ability to access multiple lenders that all have their niche in the industry. So if you're talking to one specific bank or one specific lender directly, they may not finance that asset, but that doesn't mean that asset can't be financed. For example, we finance garbage bins for recycling companies. We've done many different assets that people thought couldn't be financed. I guess one things we get asked a lot is about multiple vendors being in one loan or lease. And our answer is yes, it can be done. And yes, we highly recommend it. Some finance companies don't want the hassle and want to do it as separate loan or lease for the sheer fact that they make more money doing it. I always encourage our clients, if they're buying multiple purchases, let's combine them into one loan, one lease for reducing administration, reducing costs, only having one setup fee. Also, your interest rate's better. If you have a $30,000 loan or a combined purchase with a $150,000 loan, the pricing's better on the larger the loan because the work is the same for the finance company, whether it's 30 or 150. So therefore, you're passed on those savings. So it's something we always recommend. It makes it easier for your external accountant at the year end. We'll combine all that package together and give you that complete lease docs with all the supporting invoices, payment slips, and that amortization schedule so your account has that complete package so it's transparent and straightforward at year end time. What are the important factors to consider when financing? I guess the first one is always a lot of people ask is what's the interest rate? And the interest rate's important, but it's also sometimes the lenders with the lowest interest rates don't also have the best terms. So for example, you're buying a used dozer, and that used dozer is a 2006. Well, some banks may want to go to 24 months on that, where other lenders will go 48 months. So I guess there's terms, there's structure, there's quality, there's fees. There's a lot of things to consider. Renewal fees, where equipment leasing, you have a one-time setup fee. That's it. It covers all your costs. There's callable debt to consider versus non-callable debt. There's the tax advantages of the lease versus the loan, savings of the taxes. So there's a lot of different aspects to consider when financing, as far as also seasonal payments is a big thing for some contractors. Aggregate contractors love seasonal payments because they're not busy through the winters, or if you've got just a landscaper and they don't want to pay during the winter months, they'd rather double their payments up when they're busy. I guess some people always say they have the cheapest rate. To me, I always take that with a grain of salt. I look at it and say, the cheapest rate, if that's what they're selling on, do they have no value add to bring to your business? Are they not accessible as service? Are they going to answer their phone when there's questions? Are they going to answer your emails? Can you phone them on a Saturday? So I guess my thing is interest rate is important within reason. A few basis points here or there, 10 basis points here or there really isn't going to make a lot of difference on a deal. But rather that service, that accessibility of the person you're talking to. Do you like that person? Can they add that value? Um, do you get along with them? Do they give you that knowledge? Can you bounce ideas off them that you're thinking you're doing? So I guess that's, to me, that's more important than just solely interest rate. And to me, anybody can be the cheapest on that particular day. So if they want a deal, a bank will buy a deal. And so you're never always going to be the cheapest. At the end of the day, we'd love to talk more to you. Our website is equipmentcapitalcorp.ca. There on there is a lot of information. You'll see different assets we financed. You'll see an amortization calculator so you can figure out payments. Some of our vendor partners are on there. We've also got our one-page app on there, which it'll work up to a couple $100,000. You can either download it in PDF format. You can fill out the online form right on there. I'd love to jump on a call, discuss more about equipment financing. My number is 403-710-5847. I find it easier to discuss over the phone, get your ideas, talk about what you're doing, and we'd love to help you out.